Really important time in our country, and no doubt that the global pandemic has really shocked the world and, frankly, shuttered a lot of businesses. And because of the Paycheck Protection Program, I think the two tranches of the Paycheck Protection Program has saved, from my understanding, somewhere near 50 million jobs. The first tranche about 30 million jobs, the second tranche about 20 million jobs, and we still have about $100 billion left that we can deploy into our communities. With that said, thinking about the backdrop of $100 billion left in the triple P, Mr. Secretary, I think you know that I feel really passionate about helping the underserved communities, whether that's Horry County in South Carolina or West Virginia and some of the rural parts of West Virginia. Very often, small and minority businesses are the lifeblood in those small rural communities. And frankly, we have the Minority Business Development Agency that has done a really good job of helping to deploy some of the resources from the triple P into those underserved communities. My question is, how can we use the MBDA or some other mechanism to get more of those resources in our rural communities, or frankly, in our inner city communities, where perhaps the Paycheck Protection Program has been more intimidating for smaller businesses like barbershops and beauty salons, some of the rural gas stations that may not have the banking relationship that was necessary at the beginning of the program, or they're 1099, which means that basically they had to wait a week before they were able to get in the cycle. How can we help those organizations and agencies like the MBDA actually provide the marketing so that more people understand the benefits and they understand the program of the triple P, Mr. Secretary?
Well, Senator Scott, first of all, thank you, because we appreciate the work you've done with us on this issue already, and we will continue to work with you and others. One of the things we are very pleased about the additional money is that the average loan size has come down considerably. I think we all had certain concerns about, in the first tranche, how larger companies were prioritized. I believe that's now been corrected. I also couldn't be more pleased how we've been able to get sole proprietors and others into the program. And as I have said, is fortunately right now we still have a significant amount of money left, but we are very much willing to consider the bipartisan request of reserving money for CDFIs at the end to make sure that the underserved communities are properly served in this program. Thank you.
Thank you, Mr. Secretary. Once again, let me just say to you, since I can see you on the screen, you have done a fabulous job under intense pressure, and without any question, America recognizes the valuable service that you've provided to our country. And I am personally thankful for your accessibility. Under pressure, you have still been very receptive and responsive, and that is to say a lot under the current conditions. So thank you very much on that. And I heard Chair Powell, I heard you talk about forbearance very quickly there, and this is an issue that continues to grow in importance and really in urgency, whether it's a small business, whether it's the residential market or the commercial market. The one concern I have that continues to grow would be commercial mortgage-backed securities. There are a number of shopping centers in South Carolina and frankly throughout the country where, having spoken to some of the folks who own those shopping centers, like 20 to 22% of the folks are able to pay their rent, which means that we're looking at a domino effect in the mortgage market, whether it's commercial and frankly residential, the same concern. I'm not sure what the answers are. Certainly, it's either forbearance or frankly bankruptcy for many firms. What should we expect? What should we anticipate from the Fed and from the Treasury as it relates to creating more liquidity in that market? And is there, I don't know that there's a silver bullet. I don't see a panacea, but what would you both suggest that I should tell my constituents on this really important issue? Thank you.
So it is an important market. As you know, we've supported the CMBS market with our open market purchases, and that did help the market keep functioning. In addition, legacy CMBS are eligible for our term asset loan facility, which is an asset-backed security. It's an important market. We continue to monitor it. The 13-3 facility is a lending facility, and that's that's the tool we have. Not every problem can be successfully addressed with such a facility, but where it can be, we're willing to take a hard look.
Okay, thank you. Mr. Secretary, anything to add to that, sir?
Quickly, please.
Again, I would just add both working with the FHFA as well as Ginnie Mae on the agency side, and then working with the Fed on the securitization side. Unfortunately, securitizations have certain limitations, but we continue to do this. Thank you.